Now let's have a look at the anatomy of those bars themselves. And the first one I want to look at is the load test bar. Let me show you what I mean by a load test bar. Basically what we're saying here is as the bar opens, it's going to drop lower, test the bottom, and then come all the way back up. What that basically is telling us is that stock has tried to sell off, and as the price was reduced throughout the day, people decided that would be a good opportunity to buy it. It's relatively undervalued, and they scooped stock up, and then the stock closed up higher on the day. Much easier to see as a diagram than text, so let's jump to that. First of all, there's two types of low test bar. Okay, there's a bullish, a seller's low test bar, which is bullish, and there's a buyer's low test bar, which is bullish. Now, don't get confused with the descriptions. Let me be very specific. First of all, if you look at the first example here, which of course is this one, notice the bar is red, and the reason the bar is red is because of what, David?
Price ending lower than it started.
That's right. The price started here, and which is right on that point there, and it closed there, which means it obviously closed lower than it opened, which will paint the bar red. Okay, so it's obviously it's the sellers won the bar essentially. Whether that bar represents a day or an hour or 5 minutes, it's a time frame, and the sellers won that bar. However, it still is considered bullish. In other words, we would still expect the stock to go up after this bar, bizarrely enough. Now, why is that? Well, because the bar opened here, it went up a little bit, it dropped all the way down here as indicated by number 1, and then it springs all the way back up to close higher, much higher than the lows. In other words, even though the bar closed lower than where it opened, it went a long way down. It built a long tail, if that makes sense, tried to test low, tried to sell off, and people in the market saw that and decided that was an ideal buying or undervalued buying opportunity, and they accumulated stock, sending that horizontal bar upwards, and of course closing the bar much higher off the lows. But it's still bullish, even though it's a red seller bar. Does everybody understand that sort of basic point of this? Well, it's not really a basic point. It can be a bit confusing to see a red bar on the screen, but to be calling it bullish. Everyone got that at this point, or does it need any further clarification? You guys got that? Yeah. Now, what would be slightly more bullish than that particular bar would be the same thing again. It opens here, and this we call a buyer bar. What is a buyer bar, Tony?
Buyer bar is when it closes higher than it opens.
That's right, it closes higher than it opens. So in this instance, it opened here, it closes here. So obviously this was a buyer bar. The bar would be painted green automatically by the charting package. You'll notice that, of course, it did do exactly what the last one did. It tested low, so it went lower throughout the day, but then it came all the way back up, this time even higher than where it opened. In other words, creating that long tail, if that makes sense. And we say it's a low test. This time it's a buyer low test, so it's even more bullish than the previous bar. Does this make sense to you guys so far?
Yep.
Yeah, cool. So let's take a look at that on a chart, and we'll see the net effect of that. Okay, so you can see here, classic example. Here's a seller low test bar. Notice that the price tests low. It tries to go low, but then it closes up towards where it opened. In other words, there's a tail on it. Look what happens next. Stock opens up and then starts to run. So it's a classic. It tests low, tries to sell off, gets bought back, and immediately the next day opens up and then starts to run. Classic low test. Yeah, Paul?
Where would you enter that trade, or is it still not enough by itself to go in yet?
No, absolutely. People enter off low tests all the time. If you, for example, if you could not, let's say, for example, we were here in time, and we haven't seen this part yet of the chart, so we're just all we can currently see at this point is this. In other words, we've just seen the low test. We could make a decision at this point that when the stock opens the next day, we could buy on the open, and if the open was higher than the high of the low test bar, we could decide that this would be a good point to enter that trade. Where would be a classic place to put a stop loss? Well, a classic place to put a stop loss would be at the low of this bar here. In other words, if it then came down here and then broke down, we would be out of the trade, and we could even take a more aggressive stance to that and move our stop loss up even higher, but we can talk about more aggressive stop losses as we progress through some of the other modules. Real classic here is that when the low test takes place, the next next day, if it opens higher than the high of the low test, that's a classic entry signal. I'm going to show you how we can add more picture, or should I say more colour into the picture to even give us a stronger entry signal than that. Yeah, Katie?
What are the blue bars on that graph?
Yeah, a blue bar means that the stock has done nothing. In other words, well, that's incorrect. That's not that it hasn't done anything. There's no buyers, or it opened and closed at exactly the same price. So whilst it has gone up and down throughout the day, it hasn't closed higher or lower than where it opened. In other words, if you see these, you'll see the horizontal bars here. They literally it opened here, it went down, it closed at exactly the same price. Exactly the same thing with the blue bar here and up here. So that's simply a no change bar is really the key message. You know, the reason I always look at these examples is, I've taught people that have traded for many years, and they haven't taken the time to really understand how to read the bars correctly. And often people won't even look at low tests or high tests. They don't understand. They think all bars are the same. And often, somebody will look at a low test and completely ignore it. And of course, they'll be going, say, short on the stock, not realizing that the next day it's likely to rally upwards. So this is your last minute 11th hour check. If you're about to go long on a stock, having a low test there is a great indicator that it's probably going to run up tomorrow. There's instances where it might not. Of course there is, but the likelihood is, following a low test, as you can see on all these examples here, is that there's your low test, okay, here and here, and look what happens to the stock price immediately following the low test. It moves up. Okay, let's have a look at buyer's bar. This is a buyer's low test. So again, this is even more bullish, and you can see here in this particular example, it's exactly what you suggested, right on the moving average as opposed to underneath it. So we'd pick up extra points for the moving average as well as the price setup itself, which is the low test on the bar there. So you can see here it low tests once on Glaxo, moves up, hits the as you can see, hits the 50-period moving average, which of course is at this point here, and then it falls back again, low tests again off the 200-period moving average, and you can see this time it does finally break through and it gets going. So let's have a look at a practical here. Let's see if we can find the low test buyer bars, and finding the buyer low test bars even on practical 1.